Yeah, look, I think it's a really interesting time when you consider what's happening around the world, and you're seeing a fairly decent divergence, I think, with the various continents. So you are seeing the US continue to grow, although it may grow slower over the coming years than it has done over the last couple of years. You're seeing China slow but still remain quite strong. And you're seeing Europe really teetering on the edge of recession. So, I think when you look around the world, you are seeing a great divergence in terms of growth, and you're also seeing a divergence in terms of equity market valuations and earnings. So to me, it actually creates a bit of an exciting time to really sort of look for those opportunities and where to invest. And for us, we're only looking at Australian equities, but we're really looking for those offshore earners which are benefiting from the US economic pickup, the consumer in Asia in particular, looking at the middle class expanding in China, and some of those sort of European businesses which are benefiting from the lower rate environments throughout the continent. So look, I think it's a really interesting time to look for opportunities, but just in the very near term, we do still have some risks. We have Brexit uncertainty, we have US-China uncertainty, and we have valuations high. So just right at the moment, I am a little bit more defensive than what I was, say, the middle of last year.
We've seen markets get off to a fairly strong start for 2019 over the first quarter. In the last couple of weeks, things have been a little bit more tepid. But what's the next catalyst for markets, do you think? Would it be the US earnings season? Is it a breakthrough or resolution when it comes to the US-China trade agreement?
Yeah, look, I think we've got three big catalysts for the global markets, and the first one is really that US-China trade agreement, and to see whether anything actually comes out of it. And when I say come out of it, I really mean whether anything substantial comes out of it. So we'll most likely see some kind of a deal done, tariffs reduced, and everyone claim that it's a victory for both sides. But really, unless we get something on the IP front that is meaningful, which would mean sort of some structural changes in China, I don't think it really serves any purpose. So I think a really strong outcome from the trade negotiations would be a big positive for markets. I think on the downside, any kind of negative in terms of Chinese growth from the next data print would be a big negative, because I think that would really be a sign that the stimulus which they've put in place is not working. So I think the next Chinese GDP print is incredibly important, just to make sure that flow through from the stimulus is happening, and it's happening on a continuous basis.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.